My name is Blair Goetz. I've been a certified management accountant in Canada for over 30 years. I've been preparing tax returns for over 25 years, and many of those have been related to Canadian American cross-border taxation issues. You can contact me at Am Taxation Services.com or email me at blair.goetz@gmail.com. First of all, I'd like to do a disclaimer. I didn't make the rules. I don't necessarily agree with the rules. And my job is to inform you and pre-warn you. And I'll be discussing concepts in a general way, which may or may not be applicable to your situation. You are advised to seek professional advice before taking any action. During this presentation, I'm going to discuss issues with Canadian Snowbirds who spend a substantial amount of time in the U.S. and or have rental and or vacation property. In the U.S., income taxation is based upon citizenship. If you are a citizen of the United States, you are taxed regardless of where you live. The U.S. also determines residency for income tax purposes. Canada, on the other hand, only taxes based upon your residency. For example, if you are a resident in Canada for 183 days during a taxation year, you are subject to income tax in Canada on your worldwide income. This is why in 1970s, Howard Hughes left Canada shortly before, just 2 days before, he met that 183-day residency requirement, so he would not be subject to Canadian income tax. A person is considered a U.S. resident for income tax purposes if the substantial presence test is met for a calendar year. Now, I'm not going to go through this test in detail. If you wish to study it, just freeze this slide and take a look at it. Suffice it to say that if you spend 183 days during a calendar year, you have met the substantial presence test, or if you met the criteria of this formula, you are deemed to be a U.S. resident for income tax purposes. Now, even if you do meet the substantial presence test, you may avoid being classified as a U.S. resident for taxation purposes if you are present in the U.S. fewer than 183 days during the year, and you maintain a tax home in a foreign country, and you have a closer connection during the year to that tax home country, and you have not initiated steps to become a U.S. resident, that is, apply for a green card. There are other requirements, and you're still required to file a tax form, but you attach Form 8840 to that tax form to declare that you have a closer connection to another. Now, if you own U.S. real estate that you are renting, you will be subject or may be subject to the following taxes and have the following reporting requirements. You first of all will be subject to U.S. federal income tax as well as state income tax, which your property is located. You also need to report that rental property on your Canadian income tax. You may be subject to U.S. estate tax, gift tax, and probate fees depending upon the value of the property. Now, the reporting requirements for U.S. citizens living abroad and residents not only include, of course, reporting your taxable income, but you must also report any bank accounts which you have in Canada. Any bank accounts which you have signing authority, such as your household account, investment accounts, any accounts that you have at work which you have signing authority, as well as any volunteer-related accounts such as scout groups, church groups, so on. You must also report any Canadian registered retirement savings plans. You must also report any corporations which hold 5% or more share ownership. And there are many other tax reporting issues which I don't have time to expound upon. I have the following tips for individuals who own U.S. rental property. First of all, hire an experienced property manager who is experienced with the Canadian reporting requirements. Be aware that there's a 30% withholding tax on the gross rent of your rental property. However, you can elect to have the business expenses deducted if you dot the I's and cross the T's. And if you do that, you can file a form with the property manager to certify that you are exempt from withholding taxes. And lastly, but probably one of the most important things, is do not work on your own property. This is in violation of U.S. Immigration law, where they deem it to be working without the proper permit on a commercial property. There are people down there who keep an eye out for this, who consider you taking away their jobs. They do report you to immigration. Many cases have been documented and occur where they will pick up the property owner, haul them off to immigration jail, not process them for weeks, and after that, your restrictions to the U.S. are severely limited. Do not do any work whatsoever on your property, including paint the kitchen, install a faucet, mow the lawn, repair the roof, do renovations, install a carpet, nothing. Do not do any work whatsoever on your rental property, a very important item. One of the most frequent questions I get asked is, how will I ever get caught? Well, first of all, 10% of U.S. Border Patrol have access to the IRS computer files. They know if you filed a tax return. They know if you have any outstanding liabilities. U.S. Border Patrol also knows how many days you spend in the U.S. This is kept track of to determine whether you meet the substantial presence requirement. And if you're a U.S. citizen, your passport renewal process also identifies whether you have filed a tax return. It's really not a question if you'll get caught, but when you'll get caught. This is no joking matter. Penalties for not meeting your U.S. reporting requirements are severe and automatic with no discretion if they are IRS initiated. They include $10,000 per year per account for each Canadian financial account that is unreported, up to $500,000 and 5 years in jail. If you have unreported rental property or any other taxable U.S. income, it's a $25,000 minimum penalty for not reporting this income. Furthermore, you cannot claim exclusions and credits, which result in double taxation. And just because you are in Canada doesn't mean that you're safe. The Canada Revenue Agency can collect on behalf of the Internal Revenue Services via provisions of the tax. So what should you do if you've not met your U.S. reporting requirements? As you've learned, the financial penalties are severe and harsh. If you come forward before the IRS identifies you and file for 6 years back, the financial account reporting, foreign account reporting requirements, penalties will be abated. You will not be charged the $10,000 per account per year that you have not reported. If tax is due, of course, the interest will apply, but penalties may or may not be abated, depending upon the circumstances. It is very important that you make the initiative, that you come forward and meet your U.S. tax requirement. So there you have it in a brief nutshell. I'm here to help you. Am Taxation Services. My website is canamtaxationservices.com. I invite you to visit it, or you can email me at blair.goetz@gmail.com or call me at 403-328-8814.